In 2026, starting a company in the United States is easier than ever. You can form a company in under 10 minutes, open a bank account the same day, and start selling globally within a week. But staying compliant, that's never been harder. The US now runs on federal automation and hyper-local state laws. Miss one filing, one deadline, or one state rule, and the penalties stack fast. This video is the complete no-fluff operations and compliance guide to starting a US company in 2026. No motivation, no vibes, just the rules, timelines, and systems founders actually need. Step 1 is federal compliance. This is no longer just about getting an EIN. In 2026, the US government actively tracks who owns and controls every company. First, register for an Employer Identification Number, or EIN. This is your company's federal tax ID. You'll need it to open a bank account, run payroll, file taxes, and sign most contracts. This is still free and issued instantly through the IRS website. Next comes beneficial ownership information, or BOI reporting, through FinCEN. Under the Corporate Transparency Act, every U.S. company must report its real owners. You must file within 30 days of formation and update it within 30 days of any ownership or control change. You must disclose anyone with 25% or more ownership or anyone with substantial control, including founders and CEOs. Missing this is not theoretical. The penalty is up to $500 per day. If you're an LLC or C-Corp planning to elect S-Corp tax treatment, you must file IRS Form 2553. The deadline is 75 days from formation or 75 days from the start of the tax year. Miss this and you wait an entire year. The biggest misconception founders have is this: I registered my company in Delaware. I'm done. You're not. In the US, you must register your business in every state where you have nexus. Nexus is triggered by living in a state, hiring an employee or contractor there, holding inventory, or crossing sales thresholds. Delaware is just where your company is born, but nexus is where it lives. You incorporate in one state, then that's your domestic state. Every other state where you operate, you must file as a foreign entity. If you skip this, you can't enforce contracts, you risk fines, and you may lose good standing. Every state requires a registered agent with a physical address. This agent receives lawsuits and legal notices. Most founders use national services like Northwest Registered Agent or CSC to manage this across states. Most states require separate registrations for income tax, sales tax, and payroll taxes. This multiplies fast with remote teams. Labor law is where startups accidentally commit felonies, especially with remote teams. In 2026, the Department of Labor uses a simplified economic realities test. If you control hours, control tools, and control how work is done, that worker is likely a W-2 employee, not a contractor. Misclassification penalties include back taxes, fines, and retroactive benefits. The moment you hire your first employee, you likely need workers' compensation, state disability insurance, and paid family leave in states like California, New York, and Washington. These are not optional. In 2026, manual payroll is a liability. Tools like Gusto and Rippling automatically register you in new states, withhold correctly, and file payroll taxes. This is essential for distributed teams. There is no single U.S. privacy law. In 2026, there are over 19 state privacy regimes. The rule is simple: you comply with the strictest one. As of January 1st, 2026, Indiana, Kentucky, and Rhode Island all enforce comprehensive privacy laws. Your product must support universal opt-out, including global privacy control signals, clear data access and deletion workflows, and consent tracking. If you use AI for profiling or decision-making, you must conduct data protection impact assessments. Several states now require age verification if minors can access your platform. This includes Texas, Virginia, and Nebraska. Ignoring this can get your app blocked. U.S. startups live on deadlines. Miss them and penalties compound silently. Key dates founders must know: January 31st, W-2S and 1099 NECs issued. March 1st, Delaware franchise tax due. March 15th, S-Corp and partnership returns. April 15th, C-Corp returns and Q1 estimates. Monthly or quarterly sales tax filings. Many startups trigger sales tax obligations without realizing it. Tools like Anrock or Avalara monitor thresholds automatically. In 2026, B2B customers won't sign contracts without proof of insurance. At minimum, you need general liability, professional liability, cyber insurance, and directors and officers insurance. This protects both the company and you personally. Starting a U.S. company in 2026 is not hard. Staying compliant is what separates real businesses from risky ones. This channel is for founders who don't want to learn ops the hard way, through fines, penalties, or last-minute panic. We break down U.S. startup operations, compliance, and back-office systems in a way that's practical, current, and actually usable. And if you don't want to manage all of this yourself, state filings, payroll, compliance, tax deadlines, and more, head over to hirechore.com. Chore helps founders stay compliant and on top of their ops without lifting a finger. Build the company and let ops run in the background.